The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Yep, that's me, Ken Shreve. Welcome to another edition of Breakout Investing on TFNN. You can catch my show 5 days a week on the network from 3 to 4 Eastern, right in front of the Tom O'Brien show from 4 to 6. If you want to give me a call, the number to use, it's going to be 877-927-6648. Don't forget, you can listen to all TFNN programming on your smartphone. You're out and around, out on a walk. Plug those earbuds in. Open your smartphone browser. Type in TFNN.mobi. You can listen to the stream that way as well. And you can also pick my show up as a podcast on iTunes. So if you can't listen live, be sure to check that out. Tiger TV on the homepage of TFNN.com. My show is carried live on Channel 1. It is archived on Channel 13 with Tiger TV. Not only do you get the show audio, but you also can look at charts live right along with me. And if you want to look at Tiger TV on your handheld device, that can be done as well. You just open your smartphone browser again, type in TFNN.com, and then go over on the right-hand side of the homepage near the top. You'll see a box with some cell phones in it. Just click that box and click it, and it will start streaming right on your phone. Okay, well, we had the Fed minutes come out about an hour ago, a little over an hour ago. These were the minutes from the January 30th Fed meeting, and apparently market's a little spooked. Big rally in the dollar today. Fed officials are considering some changes to its quantitative easing program at its next meeting, which will be March 19th and 20th. Apparently there is some differences in opinion, not surprising, about how to proceed with the current $85 billion per month of bond purchases, when to end it, things like that. So we'll get more clarity on that, but let's check in on the major averages. Again, market being hurt by... Well, we had a recent breakout in the U.S. dollar index, and it is up big today. Let's check in on the indices. First, we'll see the Dow Jones Industrial Average pretty much at its session low here, down 87 points, 0.6% to 13,949. S&P 500. S&P 500 is... also down sharply, down about 15 points, a little more than 15 points, 1% to 1515. And the NASDAQ Composite, I think tech stocks are underperforming here by a little bit. They're down, NASDAQ Composite down 38 points, 1.2% to 3175. Indices still have a long ways to go. Not really a long ways to go, but still comfortably above their 50-day moving averages. You can see the NASDAQ's 50-day line is at 3102. Obviously a key support level for the tech index. Notice how it almost coincides with its last breakout area here. It has been trending higher as the NASDAQ has been wedging higher here. The 50-day line has been rising, but a pullback down to the 50-day line seems like a likely scenario at this point. Looking at volume in the market today, it's not overwhelmingly heavy market. Right now we're tracking pretty close to the volume that we saw Tuesday on the exchanges. NASDAQ volume Tuesday was 1.7 billion shares. That's what it trades normally on an average day. So volume Tuesday average at just over 1.7 billion. We're tracking very close to that today. NYSE volume yesterday also average at 730 million. We're tracking just a tad higher than that today. So not a great day for the market, but this is a market that's probably in need of a little bit of a consolidation phase. I'm not expecting a full-blown major correction to take shape here. I still think the pieces are in place for a decent year for stocks, but let's keep an eye on the 50-day moving averages here for the major averages. Again, for the NASDAQ Composite, The support level to watch is 3102. Let's go back and just check on the S&P 500. We'll see that the 50-day line for the S&P 500 is at 1472. 1472 for the S&P 500, and for the Dow Jones Industrial Average, 50-day moving average is at 13,570. 13,570. That 50-day moving average changes on a daily basis, but those are generally the price levels to watch here. So that is that. Let's check in on the U.S. dollar index. Definitely a big move by the greenback today. Here is the U.S. dollar index, and we did have a breakout over a descending trend line last week. See the dollar reversed off its high yesterday, but right now we've got the dollar trading at 81.07. So much for that 200-day moving average being resistance, because the 200-day moving average for the U.S. dollar index headed into today was 80.91. So we are at 81.07. So this does look like a fairly significant breakout for the dollar. So we'll see what effect this has on the market. Obviously, the market is not liking the strength in the dollar today. So definitely a time not to be on offense here when you're looking for stocks to buy. I was talking to a few different people today. It seems like the short opportunities out there right now seem to have the edge over the long opportunities. I've been saying just so many extended stocks out there, very difficult to find actionable buying opportunities at this point. So just another reason why it's important to listen to what the market is telling you on a daily basis. If your screens aren't giving you much in the way of buying opportunities, there's no sense in forcing the issue. We've been nibbling selectively, not too much. A lot of the holdings in the Ultimate Growth Stocks model portfolio are positions that were initiated back in November, December, very early January. We've put on some new positions in recent weeks, and you know what? Those new positions really haven't done much. So again, there's the message from the market. If new initiations, if you have expectations, you're buying a technically healthy stock where you think the chances for a breakout are good, or you think the chances that the stock is going to continue to remain under accumulation, if you think those chances are good, and then the thesis does not play out and the stock is just treading water, perhaps even going a little bit below your purchase price, in a market like this, it's best not to fool around with new buys. They could start heading the wrong way pretty quickly. Had some housing start data for January today that was a little worse than expected. The data weren't that bad. I mean, a decline was expected, but starts were down 8.5% from December to 890,000 units. The estimate was for a smaller drop to 914,000. So nothing really disturbing there. Housing starts from December were revised slightly higher to 973,000 from 954,000. Permits up slightly to 925,000, a little better than expected. But the action in the home builders today, particularly troublesome. Let's take a look at start with the ETF, the ITB. iShares Dow Jones U.S. Home Construction Index Fund, a very bearish move today for the ITB. Money coming out of home builders today in spades. Big move downward here, down 4.9% to 2218. Notice how it is holding just above that 50-day moving average here. So the ITB coming in on a critical support level. Last trading at 2218. Its 50-day moving average is at 2210. So excuse me, a lot of selling in the home builders today. Let's take a look at some stocks in the group. Ryland Group under a lot of pressure. Big break below the 50-day moving average in heavy volume for Ryland Group, down 7.5% today to 34.60. 34.60, and also take a look at Lennar here. Lennar also big break below the 50-day moving average, down 5.8% to 37.60. D.R. Horton was one of these newer initiations for the Ultimate Growth Stocks model portfolio. We actually bought the stock on the big breakout day here. quickly realized that this was a breakout that was not likely to work. We got out of the stock earlier today at much higher prices. D.R. Horton down 5.8% to 21.93. So we took a manageable loss here, understanding that not every stock we buy is going to work out. Sometimes you're going to be right, sometimes you're going to be wrong. When you're wrong, it's best to just lick your wounds, move on. Keep losses small. You can always overcome small losses. If you don't sell and let a small loss get out of control, that's when the big damage can be done to a portfolio. So no home builder exposure at this point. Thought D.R. Horton had a chance to work when it reported outstanding earnings back in late January. It made a little bit of headway, and then sellers started to come into the stock, and it's still holding above its 50-day moving average here, but definitely showing bearish price action today. We also had the latest reading on wholesale prices from the Producer Price Index for January. Overall prices up 0.2%. The core rate also up 0.2%. The mostly in line with expectations. The expectations were for overall prices to be up 0.3%. So a little bit better than expected. Core rate up 0.1%. That was the estimate. Came in at 0.2%. So nothing earth-shattering there when it comes to wholesale prices. Mentioned the big move in the greenback today. April gold takes another hit, down $26.20, 1.6% to $15.78 an ounce. GLD recently took out its December 20th low of 158.39. 158.39. That was the low set right here, and boy, it is just getting uglier and uglier for gold prices. GLD today down 2.7% to 151.09. Bond yields higher at first. They have reversed. The yield on the 10-year note slightly lower, 2.02%. Yield on the 30-year bond down slightly to 3.21%. M&A news. Let's take a look at TTS. TTS. This is a... no, it's not TTS. Oh, I hate it when I have a wrong ticker system here. Ticker system here. Total... Bear with me here. Total Systems. TSS. Thought that's what I said. TSS. Total System Services. There it is. This is a payment processor. Total System Services, ticker TSS, under a lot of pressure today, down 6.3% to 22.01. Company said it will buy prepaid debit card provider NetSpend Holdings, ticker NTSP, for about $1.4 billion in cash. NTSP makes a big move today. Big gap up for NetSpend Holdings, up 28.5% to 1580. So still seeing M&A activity out there. That's a good sign. Headed into the first break. Came up pretty quickly, so stick with me, folks. Going to come back in about 3.5 minutes or so. Ken Shreve with you on Breakout Investing. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Right now, it looks like volume on the exchanges today is going to come in. It's still close and still too early to call, but it looks like it is going to come in higher than Tuesday's session, which would result in another higher volume decline for the NASDAQ and the S&P 500. Headed into today, we were at 3 higher volume declines for the NASDAQ in recent weeks, just 2 for the S&P 500. Still fairly limited distribution when it comes to just looking at price and volume in the major averages, but after today, unless things change dramatically, which doesn't feel like it's going to, anything is possible, though. We could end up with 4 higher volume declines for the NASDAQ after today and 3 for the S&P 500. So there are enough yellow flags out there to be on the defensive here. You've got home builders look like they're ready to, roll over here. Again, it's probably too early to make that call with conviction, but some very weak action underneath the market today. So why don't you take a look at shares of BlackBerry as well. New ticker symbol here, BBRY. Couple of analysts out in recent days saying that sales of the company's new Z10 smartphone not looking that great, actually. The phone right now is only available in 2 markets. The United Kingdom and also Canada, but sales not looking all that great in the early going. BlackBerry down 4.4% today to $1.72. We did get a little more color on this proposed merger, Office Depot and Office Max. Let's take a look at Office Depot. They also reported earnings today. Wow, what an ugly day of price action for Office Depot. Down 22%. There may be news that I'm not aware of here, but stock is down 22% to $3.90. News is this is going to be an all stock deal valued at about 1.2 billion. So it's going to be an all-stock deal, 1.2 billion. Shares of Office Depot under a lot of pressure today. They did come out with earnings down 67% to a penny a share. Sales were down 12% to 2.6 billion. I don't have the Thomson Reuters consensus estimates here, but Office Depot taking a big hit today. Office Max. Let's see what Office Max is doing. It is also down sharply, down 13% to $11.30. We'll see if there's any late breaking news on this merger, because these stocks, maybe they're just coming down hard with the broad market here, but both stocks well off their highs. Office Max hit an intraday high of $14.92. It is now at $11.30. So that is a very significant reversal off its high. And same with Office Depot as well. It hit a high of $5.54, now trading at $3.86. So a big reversal off its high as well. Also want to take a look at shares of Intuitive Surgical. Yesterday, here it looked like the stock was getting very close to breaking out over a swing point of 585.67. Very skittish market here, though. Look at Intuitive Surgical today, down 4.4% to 556.57. The Journal of the American Medical Association today published a study that basically showed the use of robotic surgery in performing hysterectomies. That's one thing that the Da Vinci system made by Intuitive Surgical does, hysterectomies. But the use of robotic surgery to perform the surgery added to the cost by a third, but still held the same risks. So kind of a bad headline for Intuitive Surgical. Stock down 4.4% on the day. In earnings news, let's take a look at Dell. Of course, Dell recently private in a deal valued at $24.4 billion. Stock isn't moving much, up 2 cents on the day, $13.82. It made 40 cents a share. That was a penny better than estimates, down 22% from a year ago. Sales down 11% to $14.3 billion, slightly better than expected. Server and networking sales at Dell rose 18% to $2.62 billion. That partly offset a 14% decline in PC sales. Government spending accounted for about 24% of Dell sales in the quarter. So Dell not moving much on that news, but again, there is a deal in place that values the company right around where it's trading now. So let's take a look at Herbalife as well. Carl Icahn, Bill Ackman battling it out here. Herbalife, after early strength, now down 5% to $37.76. Earnings were pretty good, up 22% to $1.05, 2 cents better than estimates. Sales up 20% to $1.06 billion, slightly ahead of estimates. Of course, Herbalife, network marketing company, sells weight management products and nutritional supplements. Pretty good numbers. Stock remains under pressure, though. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Selling intensifying in the NASDAQ composite as we head into the close here. Right now, the tech index down almost 45 points, 1.4% to 3169. 3169 last for the NASDAQ composite. Checking in on the S&P 500. Selling intensifying in this benchmark index as well. It is now down a little more than 17 points, 1.1% to 1513. And the Dow following suit here near its session low, down almost 100 points, 0.7% to 13,936. Fairly limited distribution. Institutional selling in the major averages headed into today. The yellow flags were out there, but still, sellers mostly kept at bay in this market. But looks like today will end up, after today's close, with 4 higher volume declines for the NASDAQ, 3 for the S&P 500. Wouldn't be surprised to see the folks over at IBD shift their market outlook or lower it one notch to market under pressure. That is just my opinion. We'll see what they decide to do. But with the very weak action in home builders today and overall bad market action, the fact that distribution days are starting to increase here, wouldn't be surprised to see a slightly lowered outlook from the folks over at Investors Business Daily. We'll see what they decide to do. Let's take a look at SodaStream today. You got another great quarter of bottom line and top line growth from SodaStream. EPS up 41% from a year ago to 45 cents a share. That was 7 cents better than the consensus estimate. Sales up 55%, impressive, to $132.9 million. That beat the consensus estimate by about $12 million. So nice bottom line and top line growth. Profit margin looks to be the culprit here. Profit margin pretty good at 53%, but that was down from 57.3% in the same quarter a year ago. It also missed estimates of 54.5%. Last week, if you might have missed it, but SodaStream and South Korean firm Samsung, they unveiled a new refrigerator that has SodaStream technology built into it, so you can make your own soda with one of these Samsung refrigerators. So nice numbers from SodaStream, but the stock is taking a hit today, down 6.5% to $49.06. We mentioned the weakness in the home builders today. Toll Brothers getting whacked. They reported earnings earlier today. Yet another home builder that is crashing through its 50-day moving average here in heavy volume, down 8.6% on the day to $33.73. They missed their earnings estimate by 8 cents. That's not good. They were expected to earn 11 cents a share. They earned 3 cents. Sales up 32% to $424.6 million. That was well below the consensus estimate of $500.6 million. Homes delivered in the quarter rose 32% to 746 units. Signed contracts rose 49% to 973 units. So, an okay report, but home builders under quite a bit of pressure today. Also in the housing sector, let's take a look at lumber liquidators. It was up nicely and still is higher on the day. One of the few stocks trading higher here. Lumber liquidators up 2.1% to $63.76. This is company that operates hardwood flooring stores, not hardware, hardwood flooring stores. Earnings up 67% to 50 cents a share, 8 cents better than the consensus estimate. Sales up 21% to almost $211 million. The estimate was for 198. Same store sales up an impressive 13.2%. Gross margin 39.1%. compared to 35.5% in the year-ago quarter. So, by and large, a pretty good earnings report from lumber liquidators. It is still trading higher, down in the bottom half of its range, but pretty impressive performance considering the selling we're seeing in the broad market today. CF Industries under a lot of pressure today. They also reported earnings. Big move lower for CF Industries, down 5.3% to 206.90. 206.90. Big wave of institutional selling in CF Industries today. Earnings of $7.27 a share, beat the consensus estimate by 30 cents, but it was only up 2% from a year ago. Sales fell 14% to $1.48 billion. That was slightly below expectations. CF Industries expects robust global demand for nutrients, especially nitrogen, during the first half of 2013, but the company was vague on the second half of the year. And the for-profit school stocks, not a whole lot of good going on in this group. Still very hazy earnings outlooks for a lot of companies. Grand Canyon Education, ticker LOPE, really looks to be the standout stock in this group, up 2.9% today, well off its high to 26.31. They beat earnings by 4 cents with profit of 46 cents a share, up 35% from a year ago. Sales up 25% to $141.3 million. That was about $5 million above forecasts. Nice move for Grand Canyon Education. See a little breakout here recently over 25. This is a very risky environment for technical breakouts, no question about it. When you're seeing higher volume declines start to make their presence felt in the major averages, so many extended stocks out there, just a very difficult environment for technical breakouts to succeed. And finally, Terex. This is a company kind of similar to Caterpillar. Joy Global, big construction equipment maker. Terex has been a great performer in the market, but down 6.6% today to 32.60. Terex much smaller than Caterpillar with a market cap of $3.9 billion. I think Caterpillar is $60 billion plus. But earnings missed estimates by a wide margin at Terex, down 24% to 19 cents a share. Sales down 13% to $1.7 billion. That was below expectations as well. Check in on shares of Priceline. Been keeping an eye on this one. Priceline under pressure. Had been showing some technical strength headed into today. Down 1.8% to 690.91. We don't know when its earnings date is yet, but it should be on or around February 25th. February 25th would be the expected earnings date for Priceline. When it does report, earnings should be up 22% to $6.54 a share, sales up 20% to $1.2 billion. So Priceline is a large company, but it still continues to deliver that excellent bottom line and top line growth. And as it turns out, its confirmed earnings date is February 26th. So that'll be next week. Another stock holding up pretty well in this market would be Chihu 360 Technology. And we'll check in on Chihu here. It is down 19 cents to 32.71, trading near its session low. Chihu is making life pretty tough for Baidu in China. Chihu has its own search engine that has gaining some share from Baidu. So this is one of the few China names I'm still watching here. In fact, when you look at its weekly chart here, and it's compelling here. You had a breakout, and then it came down to its 10-week moving average here, and still holding above this line. So it looks to that 31 level looks to be pretty good support. If this market can straighten itself out, this one still has potential. But again, market not acting all that well right now. But Chihu, one of the better performing stocks out there. Coming up tomorrow. Tomorrow's Thursday. Pretty quiet in terms of economic data for the better part of this week, but be pretty busy tomorrow. Weekly jobless claims expected to be up 17,000 to 358,000. The consumer price index, we got fairly tame wholesale inflation data earlier today. The CPI is expected to be up 0.1%. Core prices, which exclude food and energy, up 0.2%. We're also going to get existing home sales data tomorrow. For January, they're expected to be flat at 4.94 million units. And the latest reading from the Philly Fed. This is a regional manufacturing survey in the mid-Atlantic area of the U.S. That index is expected to come in at 1.5 after a negative 5.8 reading in January. Folks, don't forget to check out a 30-day trial to Ultimate Growth Stocks. We have been lowering our exposure to the market here, still holding on to some gainers in the model portfolio, but want to be careful not to give want to be careful not to give gains away here and go back to break even. So we have been trimming some positions. We've been selling outright for profit, and as I mentioned today, D.R. Horton was a relatively new buy that did not work out, so we take a small loss, move on, and realize that we're not going to have a batting average of 100% when picking stocks. So not going to be right all the time, and if the stock is if your thesis does not work out with the stocks, you bought it for this reasons because you think it's going to do that, and if it doesn't happen, the market's telling you the timing wasn't right, then you listen to the market, you keep losses small. But 30 days free of Ultimate Growth Stocks, you can get that right on the homepage of tfnn.com. You just click on the newsletter tab on the homepage, then click on the investment newsletter area, and 30 days free. I publish every Tuesday an extensive weekly update, and then in between weekly updates you get email buy alerts, sell alerts, general market updates. So no obligation, 30 days free. Check it out on the homepage of TFNN.com. As far as the newsletter itself, Ultimate Growth Stocks, yes, I do favor growth stocks. I like companies with compelling growth stories. I use a combination of fundamental analysis and technical analysis to help me decide when to buy, and I use technical analysis alone to tell me when to sell. So I don't wait for negative headlines to come out. Normally price and volume in a stock will start to turn negative well before a negative headline comes out. So basically just study, look for stocks that are under accumulation, and buy stocks that are under accumulation. And when these stocks that are moving higher in expanding volume, either on a breakout or bouncing off support, when I start to see signs of institutional selling or distribution near a top after a big price run, then we get out. So the goal is to always buy a stock and hold it for a long period of time, but sometimes we'll take profits, and other times we'll give winners plenty of room to work. So you can, so a 10, 20% gainer can turn into a 30, 40% gainer, and so on and so on. Okay, earnings reports. After the close, we've got, let's take a look at SAM, S-A-M, Sam Adams. This stock has been a tremendous winner. Sam Adams has... well, it was higher at one point today, but it has reversed in spectacular fashion. Hits a high of 162.31, and it is now trading at 152.88, pretty much at its session low. This was a stock that had a bullish gap up back in December, and this is another example. Buying the gap up in December when the company raised its earnings guidance was a perfectly prudent strategy, because if you had bought on that gap up and paid $130 for the stock, well, even with today's decline, it at 152.88, you still have a nice profit in it. But Sam is coming out with earnings after the close today, and earnings are expected to be up 5% to $1.25 a share. Sales up 7% to $152.5 million. Interesting what is going on with Sam here, because it almost looks to me, the way the stock has been trading, that the market is almost giving it like a takeover premium. There's been a lot of consolidation in the beer space. Of course, Anheuser-Busch InBev, ABV, they're trying to acquire Grupo Modelo. Remember, just not that long ago, to appease regulators, they said, okay, we'll sell the Corona brand. The U.S. rights to Corona, we'll sell that to Constellation Brands. That will allay regulators' fears of just too much dominance in the market. But the beer industry is always consolidating, and Boston Beer has been such a strong performer for a long period of time. You'd think that this Sam Adams brand could be attractive to someone. You never know, but has been a strong performer. Very ugly price action today ahead of earnings. Made a big move yesterday, extended gains today, but has reversed, now down 3.1% to 152.88. Also after the close, this is an IPO that a lot of people kind of forgot about, but LifeLock, identity theft. They provide, a lot of people kind of scoff at the company's products and services, but you know what? The bottom line growth is there. The top line growth is there. It's been a very successful IPO since its debut in October at $9 a share. We'll come back and talk about LifeLock when we come back, and we'll do that in 3 minutes. Stick with me, folks. Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's go ahead and take a look at the NASDAQ composite here. Still pretty severe selling pressure in the composite. Looks like we're going to get distribution day number 3 for the tech index today. It is down 47 points, 1.5% to 3166. Let me go ahead and pull up a chart here for the NASDAQ composite. There it is, NASDAQ composite. Okay, this is the... No, that's not what I want. My apologies. Let me go back and pull up the Dow here. I thought I had these saved, but maybe not. Dow Jones Industrial. Average, no. Okay, last try here. We're going to take a look at 3D Systems here, still holding its 50-day moving average. Pretty compelling performance considering the NASDAQ is down 1.5%. 3D Systems only down 0.6% today to 59.83. But this is a chart with the 10-day, 20-day, and 50-day moving average plotted. So let's go ahead and take a look at the major averages with the 10-day, 20-day, and 50-day. Okay, here's the Dow trading at 13,928. Its 20-day moving average 13,939. So you can see flirting with a break below the 20-day moving average. If that happens, certainly, again, a trip down to the 50-day moving average eventually would not be a surprise at all. Having a lot of problems here. People watching in Tiger TV. Apologize about that. Let me go ahead and pull up another chart here for the SPX. Okay, there we go. S&P 500. You can see just sitting above its 20-day moving average here. Last trading at 15.11. Its 20-day line is at 15.10. So only a point above the 50-day. The 20-day, and the Nasdaq Composite here sitting just a little bit underneath its 20-day moving average here. So very bearish technical action in the market today, no matter how you slice it. Time to play defense here. It remains to be seen where this selling is going to take us. But again, with all the extended stocks out there, it just seems like this is a market ripe to consolidate. Not a market ripe to pull in 10%, 15% off a high, but just a little consolidation. If you look at where the indices are now, even headed into today, you're only looking at a pullback of about 3.5% down to the 50-day moving average. That may seem like a long way to go for the Nasdaq Composite here, but from its recent high, you're only talking a pullback of 3 to 3.5%. So let the consolidation happen. Let some of these strong performers take breathers, and then when money starts to come into the market again, you'll see some new buying opportunities most likely. But until that happens, I think the risk outweighs the reward in this market. All right, back to LifeLock here. This is the recent new issue that is going to be reporting earnings after the close today. They're expected to earn 7 cents a share. That would be up 133% from a year ago, with sales up 38% to $73.4 million. Again, LifeLock had a very successful IPO. It came public in October at $9 a share. It is trading right now at $10 a share, $10.19, down 6 cents on the day. I thought that LifeLock actually was let's see here, LOCK. Yeah, no, that was right. Came public at 9, now trading at 10. But big top line, bottom line growth expected at LifeLock. We're also going to hear from Tesla Motors after the close. Before the open tomorrow, Walmart. Take a look at what Walmart has to say before the open tomorrow. What's going on in retail? We will find out. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, folks, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.